All right, awesome. Thank you, Darrell. Let me do a quick sound check. Make sure you guys can hear me okay, and also see a slide that just says the new and improved squeeze system. Awesome. All right, so what we're going to do is we're going to dive in now. Good news is, for those of you that if you were with us last year, we did a launch of kind of a new and improved squeeze. And if you've got that, you're good to go. Just going to show you some kind of updated ways to use it, some new setups that it's setting up on, and a few extra tools that we kind of added to it, which you'll like. And if you don't know what this is, you're in for a treat, because this is kind of what's been driving a lot of the progress, at least that I've made this year in my various accounts. And I will, be showing you those and all that kind of stuff. And then we'll just kind of dive in. So let us dive in here. So I'm going to start off here. This is just kind of a little bit of background in terms of my own trading. And for those of you that don't know, I placed my first trade as a senior in high school, and I didn't necessarily touch the buttons myself. I had spent an entire summer working for the magnificent princely sum of $4.25 for each and every hour that I worked at a cookie store in the mall. And over the summer, I had saved up about $1,200. Keep in mind, I lived at home, so I didn't really have much in the way of expenses. Okay. And at the end of that summer, I came home one day and I saw my stepfather, Lance, and three of his buddies sitting around the table, and they're looking at a newspaper. I don't even know what it was, but I heard them say something, well, if the earnings are good, we could make 100% return on our investment. And so I was intrigued. And so the very, very, very short version is that I ended up giving a guy, one of his buddies, $1,000. And what he did is, because I was too young to open an account. I think I was 17 at the time of this conversation, or maybe I was 18. But either way, I didn't have time to open the account. He's just like, look, give me the $1,000. I will buy the options for you. If they lose money, you're SOL. If you make money, I will give you your money back in the profits. That way you at least know what's going on here. And I was like, cool. And so what happened is I gave him the money, and about 2.5 weeks later, they met up again, and he gave me my original $1,000 plus another $800, and basically is like, congratulations, you made a profit. Welcome to the world of trading. And I got to tell you, at that point, I was hooked, because I had spent an entire summer working 6 to 8 hours a day, 4 to 5 days a week, slinging cookie dough, and all that effort for 3 months after taxes netted me $1,200. And here I gave this guy $1,000, and then I went off and did whatever I was doing, and I got an 80% return in 2 weeks for no work. And that was the first time it really hit me, the concept of putting your money to work, having capital working for you. All right. And that was pretty amazing. And I do that to, and so that's my whole thing, is that's my passion. That's what I'm fascinated by. And I'll show you some of the stuff that I'm doing today. Now, I show you this slide here. Yeah, my first trade was a winner, but not every trade after that was a winner. So basically for the next 8 years, I went on a trading journey. Okay. And so I have a couple of quick stories here. So one, if you guys heard of a company of iOmega, back in, gosh, I think it was 1994 or 1995. I don't know. It was right around there. But at that point, I was going to Investors Business Daily conferences. I was doing, I was making some money. I was losing some money. And I met this girl in college. She was kind of cute. At that point, I'd been going out with this girl for a while. I was kind of, as I got to know her, I realized she was kind of crazy. So I was looking for someone new. And I ran into this girl. She seemed like, I don't know, genuine. Got to talking to her, and we got to be friends. Well, it turns out she had $20,000 in cash from student loans. I was like, hey, I have this great idea. If you give me the money, let me invest it for you, and we can go from there. So the good news is I know this story sounds horrible, but it has a happy ending. I put it into iOmega, and and the money tripled in a couple of months. Now, had I held on to it, I remember this because I got stopped at 18 3/4. It had gone up to $30, and I placed a stop loss at 18 3/4 after getting in at like $5. It stopped me out, and split adjusted over the next 6 months, it went up to $300. So had I held on to it and sold at the exact top, it would have made $1.4 million, right? So it kind of puts a damper on that. Anyway, I gave her her money back plus half the profits. And then today we're married. We've got 3 kids. And I always wonder what would have happened if I would have blown that money, if I'd have blown it up. But anyway, it worked out good. I don't recommend that, by the way, but that one worked out good. So from there, 3 times what happened is I had about $10,000 and I was aggressively trading options. I'd run it up to about $120,000. And at that point, I would take out about 20K and I would put it into duplexes. And then I would take the 100K and say, okay, I've got 100K now. If I was able to do 10K into 100K, I'm going to take the 100K and turn it into what? $1 million. And the moment I started doing that, everything started going wrong and I would take it back to 10K, right? I did that 3 times. The worst time was I had an account, had about 150K in it, and I had gotten a job kind of sight unseen when I was working in the corporate world up to Minnesota. My fiance, Maria, who's the one I traded her money for, we went up there, we got this apartment, and our cars from Texas didn't work. She was trapped. And I was like, all right, we got to buy a house. And so I decided to use some of my money from my trading account to buy the house. Well, about a week before the closing, I decided, like, you know what? I don't want to take money. I like having a $150,000 account. I was wiring money out every week. And I didn't want to like take out 30K because I think psychologically it would have messed me up. So I tried to do a big trade and make $30,000. So I'd have 180K, wire out the 30, and I'd be left with 150. Well, and I wrote about this in my book, but this basically I bought a bunch of put options on the OEX and the markets exploded higher. I became a deer in the headlights. And at the end of 4 days, my 150K was $8,000. I totally blew it up. The closing was the next day. I panicked. I did not tell her what happened. I went to the bank. I maxed out all my credit cards and I got just enough money to buy the house. And there was about 30 minutes there at the closing where they're like, Mr. Carter, you said this money was coming from your trading account. We need to check where this came from. And I just acted really, really stupid. We ended up getting the house. I threw up afterwards. And then for the next 6 months, I had to figure out, do I want to do this or not? Because I was just like, I couldn't, if we're going to get married, we're going to have kids. I could not put my family through that, right? It really sucked. So what I did over the next 6 months, obviously I had to keep working. So I kept my job. I did have real estate that I could sell. So I could, raise kind of a small trading stake. But the 2 things that happened is, one, I came across The Disciplined Trader. That's a Mark Douglas book, okay? The Disciplined Trader. That changed my total perspective on trading. He also has a follow-up book called Trading in the Zone. If you guys are not familiar with those, I highly recommend them. Trading in the Zone. And then I spent some time with some mentors. And the short version is after all that, I basically learned, one, is that if I have a setup and I follow the setup, the money will follow. If I chase the money, what's going to happen is it's going to automatically kick in all of the bad habits that cause traders to lose money. So the irony is in trading, if your main goal is to make money and that's what you're focused on, your brain is going to get taken over by the markets. It's going to be automatically tricked into making all the mistakes that cause people to lose money, taking profits too soon, letting losses run. That's called eating like a bird and shitting like an elephant. Okay, it does not work over the long term. So again, it took me 8 years to figure all this stuff out. I was like, oh my God. And I almost threw in the towel a couple times. Thank God I didn't, because I love trading. It's an amazing life, an amazing lifestyle. And so what I wanted to talk about today is really just kind of out of all this, what came out of it is kind of the core setup that I use to this day, some of the strategies that I use around it. All right. And just kind of take a look at that. So to me, there is no like work-life balance. Trading is my life. I'm always looking at quotes. My wife and I just got back from a 2-week trip to India. you know, while I was at the airport, I was placing trades, and it's not obsessive. It's just, you know, I don't actually stare at the charts too much. I just like to know. I like to check in every couple hours. What are the S&Ps doing? What's going on? So, but part of this is also incorporating a life, you know, with my kids. And we homeschooled them for 3 years. This is a trip to Africa. It's my oldest son there. We went as a family, Richard Branson. This was kind of fun. Did a little interview with Lance Armstrong. This is my 50th birthday here. Those are kiddo's wife. We took him to Africa. It was so funny because this kid was asking me what I did for a living, and that's my youngest. He's heard this story so many times. He's like, kill me now. It's my daughter. We're in Africa. And then, you know, I like to trade multiple monitors, stuff like that. That's a book I have out. So again, this is just, it's my life. I love trading. I would say if there's an area of expertise that I have, yes, part of it's trading, but it's also understanding exactly what's going on in people's brains that are trying to make a living trading, and they're frustrated by it. Like, I've been through there. I don't know if there's a, you know, if you've got like an area where it's kind of like, okay, of all the people on the planet, who could help me with this? It's stuff that I've been through. Like, I can probably help you with it because I've made all the mistakes already. So that's the idea. So the setup that I like is called a squeeze. All right. And if you know what that is, awesome. If you don't, I'll walk you through it. But it's hands down my style of trading. It's my favorite trade. Okay. My trading style is I'm not very patient. I do not want to sit in a trade for months. Okay. I want to sit in a trade for maybe a couple of weeks, couple of days. I want to catch that pop. Okay. So, you know, you want to know your trades. So I don't have a lot of patience. So guess what? I'm not going to be doing a trade where I'm sitting in it waiting for something to happen over 6 months. I want to see the action now. Okay. I want to be able to time it so I can get it. And it doesn't mean that I want to scalp. I just, you know, I want to be in the trade while it's moving. So a squeeze helps identify the times in the market where it is about to enter into what I would call a focused, concentrated move, or if you're familiar with options, the idea that it's greater than expected. Okay, a greater than expected move is really how you make money if you're long options. Expected moves are kind of priced in, and that's, you know, you want to do spreads and you're going to make a little bit during that. But if you're really going to catch a move, you've got to have some kind of a signal that gives you an edge that it could be greater than expected. Because if it is greater than expected, then and only then do you have an opportunity to really catch some nice trades. The other thing to realize is that 80% of the time, the markets are doing absolutely nothing. It's called backing and filling, okay? And during that time, it's easy to get very frustrated. But if you understand what's happening, you'll know just to avoid those times, okay? You want to identify that 20% of the time when there's a focus move, the odds have increased exponentially that there's going to be a focus move, a greater than expected move, okay? And the squeeze helps to pinpoint that 20% of the time that happens, okay? And so what I've learned, and a lot of times, especially in the room, is I'll get tons of questions. What about this symbol? What about this symbol? And I'll take a look at it. No squeeze. I'm like, I don't care. I don't care if this is the most exciting stock you've ever seen in your life. No squeeze, no trade for John. Okay, that's how I look at it. So what is a squeeze? If you know what the squeeze is, this will be kind of some great, nice aha moments for you. If you don't know what it is, the squeeze is that moment in time where it's telling you that a market that's doing absolutely nothing, okay, chop, chop, choppity, chop, 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 is about to have a greater than expected move. Okay. And when I see that, that's when I can go in, I can buy some call options, I can catch the move and flip them out. All right. That was like a $23,000 profit in a couple of days. But remember, if I had bought call options here, and I don't know if you guys have ever done this. This used to happen to me all the time when I first started. I would say, wow, this looks great. And I would buy call options. And then over the course of the next 2 weeks, it might trade sideways or slightly higher. And the premium portion of that option was just getting annihilated. What I want to be able to do is get in and see this explosion of price action, because then not only does the IV increase during that, but of course the intrinsic value of your option increases too. The other beauty of the squeeze, and we'll talk more about this in a second, is that that's the only time you really want to buy options. If you buy options during this time, you're screwed anyway. And we'll talk more about why that's happening. And of course, if you're a more advanced options trader, I'm always a fan of selling premium. So Mel, believe it or not, we did have squeezes for the recent moves down. I will show you those. All right, so I love the squeeze, but is there something better? So this was a question that I started asking myself last year. So the squeeze, as we've already discussed, is the most versatile trading tool I've ever come across in all my years of trading. I use it on stocks, I use it on options, futures, and I can use it for position swing or day trading because it's simply a function of what time frame you're looking at. If you work full time, you don't want to stare at the computers, guess what? You're going to use this signal on weekly and monthly charts. If you're more active, then you're going to be using daily charts and 30-minute charts. If you like to scalp, frankly, I'm not a fan of scalping. Yeah, you can use it on a 1-minute chart, right? But it's for me, the juice has to be worth the squeeze. You know, if I'm going to put all this time in it, I don't want to sit there and do a lot of work for a point, right? I want a bigger move than that. So typically, you know, the smallest time frame I'm looking at is at about 30 minutes, depending on what's going on. So not only does it pinpoint moments in time when you can look forward to a greater than expected move, but it also works well and complements many other trading tools and systems. So almost any strategy that you use can be enhanced, okay, by utilizing the squeeze in conjunction with it, because it simply identifies those moments in time. So squeezes are great for home runs. And home runs add nice quantities of capital to your account. Now, of course, not every squeeze is going to work. It's got about a 75% win ratio. It's higher than that if you add a few other things to it. And not every squeeze is what I would call a grand slam home run. You'll see some examples of grand slam home runs that we've had this year in Beyond Meat and Tesla and a couple of other ones. That's when that happens, that's great, but I don't plan for it. But the issue is that the big squeezes on the daily charts and above, the ones that really, really drive those big moves, they just don't happen very much. For example, on a monthly chart, okay, on a monthly chart, big squeezes only happen every 3 to 5 years. That's once a year. By the way, we're just wrapping up a monthly squeeze on the indexes right now. So, and on a daily squeeze, maybe it's every, couple of months. Okay, that's not enough. I'm an active trader. I got to get more signals. And so it got me to thinking, is there a better signal? So before we get into that, though, let's take a few steps back because I want to make sure that we're all on the same page as to, first of all, what a squeeze is, but more importantly, the concept of why it is so critical to understand, okay? Because if you understand the concept of the squeeze and why it works and what we're looking for, then it'll make a lot of things click together, okay? Yeah, I'm actually watching the NASDAQ right now. There's a 15-minute squeeze developing. We'll keep an eye on that. We may come back to it. We may do a trade here. Okay, so this is a chart of Momo. Oh my gosh. Hold on. Let's look at the... All right, so here's the NASDAQ future. So you've got a squeeze right here, right? We've been consolidating. So I'm keeping an eye on this. I may have to buy some NASDAQ futures here tonight. We'll see. We'll see. All right, I'll keep an eye on that. But to answer your question, does it work on futures? The answer is yes. Fire away. Okay, so this is a very rudimentary slide, but it is important. Okay, daily chart of Momo. Doesn't matter what the stock is. What's important here is to understand the concepts. So a couple things. One, it's in an uptrend. Okay, so that's pretty obvious, right? Uptrend, higher highs, higher lows. But what we want to be careful of is that we don't want to, buy a top, even if it's temporary. Yeah, it comes back and eventually goes higher, but buying tops, especially with options, is pretty tricky. So what I want to do is when there's an uptrend like this is I want to look for opportunities where there's a lot of upside, okay, but also where my total risk is small and I can use a fairly tight stop. So if you look right here and say, okay, I'm going to buy right here, what happens? Not a lot of upside. You're just getting destroyed by chop. All right. And look at this. This lasts like 5 weeks. That's 5 weeks of hell if you're a trader. That's not what I want. What I want is this. You know, I want this. I want this. I want to avoid that. Okay. So the main problem is that while there are some solid moves here, keep in mind that only happens, I mean, 15% of the time is there was what I'd call a focused move. Okay. And you might think, well, what about just buying pullbacks to the 21 period moving average? That's a piece of it. You know, at least that way you're buying support, but not every pullback holds. And sometimes it keeps going, right? So there's a couple of things here that we're looking for. When is an ideal moment in time to get into this trade where we're comfortable taking a risk, using some leverage, and letting the process play out? Okay. So the first thing I do, and again, this is over time, just kind of playing around with this, is I'll get into a stock when the Bollinger Bands, if I get into a stock when the Bollinger Bands are expanding, is almost always a horrible entry. Okay. And if you write this down, if you're trading options, and just remember this, if you buy a call at the top of the Bollinger Bands when they're expanding, you are like 90% chance you're going to lose money. Okay. If you just put this on your chart, it's going to save you from making more mistakes than probably anything else you do. So that's the first thing. Now, the other side of the coin is that if I actually wait to get into a trade until the Bollinger Bands are contracting, which happens here, which happens here, which happens here, what's happened is I've identified a high probability moment in time, okay, a HIPMIT, where even though I'm not 100% guaranteed what's going to happen, I've suddenly increased my odds of success for a couple of reasons. One, the Bollinger Bands contracting also indicates a market that's quieting down. Guess what? If you're going to buy a call or buy a put option and you decide to buy when the Bollinger Bands have expanded, not only are you buying at the top of a move or the bottom of a move, but you're also buying when the premiums exploded. So you're getting a double whammy. Okay, selling options in those instances is actually way more advised, but let's talk about understanding the movement here. So when the Bollinger Bands contract, not only do you have a much better chance of catching a move when the Bollinger Bands expand again, but you're also buying the options at the correct price. And half the battle of options trading is actually not getting ripped off when you decide to buy. Most people get ripped off because they just don't understand when to buy them. So the end result is that if you're not aware of that, this is what happens. Now, remember when I was talking earlier about the whole concept of, all right, I'm trading and my goal is to make money. Well, if your main goal is to make money, this is naturally the rhythm that the human brain falls into. We actually have no control of this. This is unconscious, okay? So you've got to be what I just call conscious mind trading. What happens is that the market's going up and it looks good. Think of this as being the top of the Bollinger Band, okay? And it's like, so you get in, and it's like, okay, now you get excited and euphoria because you're going to start counting all the money you're going to make. And then it starts to come back. There's a little bit of anxiety. And then denial's the moment when you're like, oh, okay, as soon as it goes back up to here, I'll get out. So why when it goes back up to there? Because your P&L at that point said you're up $1,000. And I don't care who you are. If you're up $1,000 mentally, you've probably already spent it. So if all of a sudden it goes back to zero, you're like, oh, I need to get my $1,000 back. All we got to do is come back up here. And then it continues to go. We take out our stop. There's panic, there's capitulation, depression. Okay. So the thing is that if you're not aware of it, this is the human brain gets tricked into doing this over and over and over again in the markets. Now, if you are aware of this, guess what? You want to be on the opposite side of that. I always say that another person's stop loss is our entry point. Okay. So it's important to understand that. So from there, what is the awesome thing about this? So the awesome thing about all of this is that when the Bollinger Bands contract, this represents a compression of volatility, and this means the stock just got really quiet, which is a great time to buy options. So the nice thing about this is you don't have to know the Greeks. You don't need to know gamma, theta, Vega, all that stuff. All you got to do is just know is that if you buy an option when the Bollinger Bands contract, you are buying it at the exact right time. Okay, you don't have to understand all the other complicated stuff. The other thing to realize is that a stock in this state can only stay quiet for so long. Okay, it's literally building up energy, and it's got to release that energy. Okay, it's going to pop higher or implode lower once the Bollinger Bands stop contracting and start their expansion phase again. All right, this is the law of volatility: contraction, expansion, contraction, expansion. It's ever ongoing, never stopping, never changing. And by knowing this, this gives us a huge advantage in terms of timing. Okay, 80% of the time, market movement is random and lacking conviction. If we're buying options in that environment, it ain't going to work over the long haul. There is no reason to risk your cash unless the odds are strongly in your favor. If you've got a hunch, go to Vegas and bet on black. You know, you don't trade on a hunch. You trade on a specific signal. You trade when you have an edge. You trade when you can put your capital to work with a reasonable expectation of a nice return. Okay, not let's see what happens. All right, so what is the key problem in all of this? First of all, how narrow do the Bollinger Bands have to get in order to be a legitimate high probability signal? Okay, that's the first thing. Second, when you do get a signal, how do you know when to get in? And more important, how do you know if the stock is going to go higher or lower once it starts to make its move, when it goes into expansion phase out of contraction phase, right? And last but not least, once you are in, how long do you stay in the trade? If it's a daily chart, are you going to stay in for 2 days? Or are you staying in for 10 days? How do you know when the trade is over? How can you tell when the Bollinger Bands start to contract again, which means you should be getting out of the trade? Okay, so those are all some legitimate questions. All right, so now what I'm going to do is we're going to go back and look at that same chart, but this time I'm going to put the squeeze on it. Okay, so below, what's nice about this below is that if we look at this here, you can see, okay, great. Here, the Bollinger Bands got narrow, and you got a 1-dot squeeze. Great. Now, a lot of times people ask, is a 1-dot squeeze, you know, is a 5-dot squeeze more powerful than a 1-dot squeeze? Believe it or not, it doesn't matter. A 20-dot squeeze is not more powerful than a 5-dot squeeze, which is not more powerful than a 1-dot squeeze. The main problem with a 1-dot squeeze is they're hard to see. They're hard to find. You know, you need time, you know, you just kind of miss it. So ideally, a squeeze is like this. And so you can see here the Bollinger Bands have contracted. We're back here to the mean. Great. We can buy an option, and you can see that ultimately it fires. Okay, the first green dot after the series of red dots, and the histogram's above 0. It's a long signal. And we're going to talk about exits here shortly. But the main thing is that you're getting in when the dots are red. All right. And then you want to be able to get out. Same thing, getting in when the dots are red, explosive move, all right? And it goes same to the downside, okay? Dots are red, momentum's below 0, explosive move to the downside, okay? Dots are red, blah, blah, blah. All right, so you get the idea here is that, you know, you're not trading this crap. That's just sideways. You know, you want to be able to hone in on those high probability moments in time where you can take action with a reasonable degree of certainty. So this is an example. This is the trade in Momo. That last squeeze on there, we saw it, dove in, turned into a great trade. But that's what I mean is I would rather, I guess the best way to explain it is, you know, do you want to be a cow grazing on grass all day, eating a little bit here, a little bit there, or a lion who takes down a water buffalo once a week, okay, for food? And that's what I look at as the squeeze. The squeeze is just that it's feeding time. It's feeding time as the best way to look at it. So when you get the timing right, so what is the biggest barrier to enjoying solid gains with options? And it is literally timing. Yeah, I'm keeping an eye here on the NASDAQ. It's interesting. It's moving, but we'll see if we get something going here. So the biggest thing is timing. So when you get the time and the direction right, you can do beautiful things with leverage. All right, I'll say it again. When you get both the time and the direction right, you can do beautiful things with leverage. So now you guys kind of know what the squeeze is if it's a new concept for you. And so throughout most of my trading career, once I discovered this signal, I kind of have lived and died by the squeeze. But I've wondered over time is, what have I missed? Okay, so here's a weekly chart of the spiders, and there's two solid squeeze signals. One here, you can see that an enormous move, and one here. But there's other moves here, and there's no squeezes, right? So if I'm only trading the weekly squeeze, then I got to trade here, and then there's another trade a year and a half later, almost 2 years later. I don't want to wait 2 years for the next signal. Okay, now again, that's a weekly chart, so they're not going to be a ton of them there. But that is, that's the first question is like, okay, are there going to be more at bats here, or what's going on here? So then I started asking myself about different settings. What settings work best in terms of generating the most signals with the highest probability of working out? What settings show that a really potentially big move is shaping up? And last, what settings could give us a heads up that a normal squeeze is about to set up so we could actually get in early? Okay. So then we started playing around with different parameters. Now, I want you to take a look. Here is that same chart. It's the weekly spiders. The old way, we got a signal here, and we didn't get another signal till nearly 2 years later. Now, don't get me wrong. They're both solid signals, but I don't know about you guys. I don't want to wait that long. Also, I noticed that this is a pretty good move here. Why didn't the squeeze catch that? Right? Why didn't it catch that? So then we tweak the settings, and you can see, okay, great. Here, great, we saw, here's a squeeze, we caught that. But look at this, there's a squeeze here and a squeeze here, caught that move, nothing here, all right? And then the squeeze here gave us a much more of a heads up that something was setting up here. And then last but not least, for this move here, nothing, no love here, yet boom, clean signal. So all of a sudden, what I'm seeing here is by tweaking the settings, and we're back testing this, like 15 different ways from Sunday and finding the settings that work the best, suddenly I've got 2 times as many signals and they're just as powerful. And it's like, oh my gosh. So I was super excited about this. So what we did with this, and this is a little bit more detail here, is that after back testing a dozen different settings across multiple time frames and market conditions, 2 settings stood out. All right, the one that stood out the most, not surprisingly, had the best backtest results. Okay, and the updated settings caught the same squeezes as the normal settings, but also caught 3 additional moves that the regular settings missed. Okay, so the regular setting did not have a signal here. This one did. The regular setting did not have a setting here. This one did. That was a phenomenal move. Okay, now the regular setting did have a setup here, but the new setup actually gave you more time to prepare for it. Same thing here. Yeah, the regular setting caught this. The new one gave you more time to prepare for it. And then at number 3, you had a new squeeze there, nothing there. All of a sudden, again, not only is it giving you signals that the old one didn't, when there is an old one, it actually gives you a heads up that something's shaping up here so that you can prepare for it. All right. So let's look at, and I've got some slides here. I'm going to show you some of the trades that I've been taking this year, as well as some of the ones that are now setting up. And I do see that the NASDAQ here actually looks pretty interesting. I'm keeping an eye on that. Let's see, hold on just a second here. So the NASDAQ here is a 15-minute squeeze right there. And I just want to grab something here real quick. I'd been trading the NASDAQ earlier. So because that squeeze is setting up, again, because I'm doing a webinar here, so I'm not going to be able to watch it too closely. So I'm just going to grab 2 contracts here and then see, we'll kind of see how that one plays out. All right. Put this back. So what I'm looking at here is that we've got a squeeze setting up right here. And then if this can kind of trigger along and get going up there. So we'll keep an eye on that one. All right, so there's that. Okay, so now, okay, so let's look at a couple of, so XLI. So with the old, so as you'll notice here, there's a great move here, no squeeze. There's definitely a move here, a little squeeze, a nice move down here, not really a heads up, big move down here, no love. All right, so now you can see with the new settings, what we get is nice setup here when there was none here. More of a heads up here. Okay, that 2 dots is kind of tough to see. 1 dot, almost impossible. Plenty of time to set up a short trade here. Plenty of time to set up a short trade here. Okay, so that's the kind of stuff where all of a sudden, not only am I getting signals that I wasn't getting before, but I'm better able to plan for the ones that I was getting. All right, so all of a sudden, this was kind of a huge, huge win there. All right, so this was a great find. Super, super excited about this. But I also wondered, are there rare instances we should know about so that we can be prepared the few times that they do occur? Meaning that, are there other settings out there that maybe they don't happen very much, but I want to know when they happen because they're more powerful? Like when the volatility gets so compressed that it rarely even reaches that level. So when it does, it has a lot of energy to release. And so we played around with that. And now you can see that there's actually 3 settings here. So here is the normal squeeze that we all know and love. Here's the new one that gives us a heads up. But now you're going to see this little 1 dotter here. And when I see this one set up, you're typically going to get a more powerful move because it's so compressed. All right. Here's a normal one. We got the heads up. And there's not the powerful one here. Again, normal one, more of a heads up. Okay, not a powerful one here. Normal one, heads up. So again, we're getting some good stuff there. But then when we go through, and this was on Shopify way back when it was a $200 stock, you can see that when you do get this, you typically get a bigger move. All right. So it's kind of a way to gauge like, oh my gosh, this potential move could be that much more powerful simply because this setting is showing up. Okay. So example here is a 30-minute chart of the NASDAQ. We've got heads up with the new squeeze. Here's the old squeeze. Once we see this show up, typically we're going to get a bigger move. Okay. All right. So let's take a look at some stuff that's happening right now. So earlier, someone was asking, John, the market has been crashing the last couple of days. How come there's no squeezes? Guess what? There are squeezes if you know where to look. So here's a 30-minute chart of the NASDAQ futures. Okay. Now, if you look at this, these are trades that we took this week. So here we are here at 97.50. All right. So, yep, we got a squeeze here, regular squeeze. We got more of a heads up here with our new squeeze. Plenty of time to get in. We got the puke. Okay. Now, look at this. Regular squeeze fired off long here and then collapsed. New squeeze didn't fire until it confirmed short. And look at this. You stay in as long as that histogram is going down. Look at that puke. Okay. At point number 1, I sold the 9,700, 9,750 call credit spread on the NDX, which is a bearish play. At point number 2, I sold the 9,600, 9,650 call credit spread on the NDX. Okay. We posted both of those. And then also that one was we did a futures trade on. Now, how was this trade? Again, this was a trade that we set up last week and took off this week. And even though it was only 2 20 contract trades, so 20 contract spread, 20 contract spread, based on that 30-minute signal of that updated Squeeze Pro, it turned into $104,000 in profits over the course of 3 trading days. So the nice thing about this is that the signal is agnostic. It's not about, oh my gosh, I can only go long, right? As you guys know, especially over the last couple of days, the markets can go down just as well as they go up. And guess what? they go down a lot faster. I love down moves. I'm always keeping an eye out for potential down moves. And the secret to that is looking at the 30-minute charts. The 30-minute charts are going to tell you the nuances, whereas the daily charts are going to be more in the direction of the primary trend. Okay. Obviously, you would think like, gosh, a 30-minute chart, it doesn't seem like it's going to give you that much. 30-minute charts, especially when they fire to the downside, are huge, huge winners. So I always want to keep an eye out on those. So here's another example, Tesla. All right. Now, we all love Tesla. Look at this, no squeezes to be found. All right. The squeeze, which I've made my career on, showing me no love on Tesla from $400 up to $900. Yet on this 195-minute setting, a huge, massive new squeeze setting up there gives us plenty of time to get in. And on this particular one, it's like, gosh, this thing's already at 800. It possibly can't go any higher, right? I'm only going to do 20 contracts. Oh my gosh, what a mistake. 20 contracts was good for $130,000. Okay. Now I'm joking. What a mistake. I mean, why not do 100 contracts, right? But again, I got a signal. You know, a lot of times people, well, how did you know it was going to go up? I didn't know for sure, but I got a signal. Okay. When you get a signal that's got a reasonable rate of probability and you see it set up, you don't think about it. Oh my gosh, it's too high. I don't think it's going to work. You just take the damn signal. All right. And you let the trade play out. Yeah, so these are all trades that we posted in the options gold room. And then in Tesla, here's another trade on Tesla, and I'll show you the setup for this one. Again, this is a good $177,000 in one day as the stock cruises up 30 bucks. So again, when you get the signal, you just want to take the signal. So another fun one has been Space, Virgin Galactic. I don't know if you guys have played this one at all. But here you can see a nice, clean, new squeeze. Nice, clean, new squeeze. 195-minute chart. I like the 195-minute chart. It's a half-day chart. And I've only done 2 trades on this because I was in India during a lot of this move. But you can see here, and I'll show you these other trades real quick, but this is cumulative. I took the screenshot today. So between January 1st and February 25th, so far this year in my main account, I've made $1,151,000 in net profits. And believe it or not, I've just kind of focused on a handful of names because I'm looking for squeezes in Tesla. I'm looking for squeezes in Amazon. I'm looking for squeezes, in this case, Peloton was a good one. Beyond Meat, Google, bonds, NDX, and then there's Space, Virgin Galactic, and then the SPYs. So the idea with this is that instead of looking at thousands of charts, okay, you just have a handful of stocks and you wait for these setups to develop in there, okay? So how can you tell it's going up? So it's very clear. So when you've got this squeeze here like this, if the momentum here is above 0, you're expecting and looking for the stock to go to the upside. I'll show you a downside one as well. Oh, well, look here. Let's go back here to the NASDAQ. So in this case, the NASDAQ, we've got the squeeze. When it fires to the downside. Momentum's below 0. When that happens, you're expecting a continuation move to the downside. So yeah, so it does give you direction as well. And again, it's the 75% probability part comes if you get in early, because sometimes, you know, it's like, oh, it's going to go higher, but you can always change after it fires. Once it fires, it fires. Okay. So boom, boom, boom. So what I want to do is we're going to dive into some more stuff. Then I want to show you, I'm going to show you the Peloton setup and the Beyond Meat setup here in a little bit. But I want to dive into a couple more things here. So the key problem with all this, as you can probably imagine, is that I love the upgraded Pro version that Eric put together. But what I don't love is having to look at 3 squeezes, right? I don't need more crap on my charts. I need simplicity, okay? And so I asked him if he could just clean it up. And of course he said, let me take a quick look. And so what he did is he came back with this. So for a while, what I was doing is I was looking at all 3 squeezes. Here's the regular one, here's the powerful one, and here's the one that gives the most signals. It's like, dear God. And what he did is crunch those into one. Okay. So what you'll see here is that there's some black and red dots, right? Because they're all combined together. So I'll show you how to read this. And okay, we already looked at that. That's similar setup there. Paychecks. So the old way to look at it was just this one setup here. But now we can like, okay, here's the red dots and the black dots, which makes it more powerful. And then you can see the orange dots, orange dots show up there. And I'll show you some more explanation on that. But in terms of a clean trade, this is a good example of that, where what I like to do, someone was asking, well, how do you know it's going to go up? A really nice tool is to add these key moving averages. So you've got the 8, the 21, the 34, the 55, and the 89 period moving averages. And at the moment in time when there's a squeeze, if these moving averages are stacked positive and prices above the 34, the odds are now about 80% that when this does fire, it's going to fire off to the long side. All right, so that's how I use those moving averages in conjunction with that to only find the cleanest setups. Okay. The other thing I'm going to talk about too, because a lot of times people ask, well, when do I get in? So Eric also programmed these arrows to show you the ideal time to get in. And you can see here, here's the squeeze, here's the down arrows. Great. Short the S&Ps, here's your stop loss. And in this case, you get the nice move, right? So we'll kind of dive in and take a look at what that means as well. All right. So awesome stuff. So I liked how this looked. I liked how easy it is to view at a glance, how it opens the door to not only more signals, but, and this is important, it's not only more signals, but higher quality signals. Because sometimes looking at the old squeeze, you kind of had to really spend time interpreting, like, oh my gosh, what does this mean? What is it doing? And that's not necessarily the most fun to do. We don't want to, as traders, we don't want to sit there and interpret what's happening. We just want specific signals so we know what to do. All right. So I asked Eric for more. He's like, fine. So the next thing he did is we put together some stuff that it's like, okay, if there's a squeeze and the odds are high that it's going to be, in this case, a down move, show the arrows. Okay. And that gives us a heads up. Great, we can short there. And ultimately, we can see that this played out in a big way on Apple. Or here's a squeeze, and it's like, gosh, I don't know. Oh my gosh, there's a buy arrow. Okay, here's another squeeze. There's a buy arrow. Okay, so what I liked about this is all of a sudden it gave it a little bit more of an edge in terms of knowing what to do. Okay, now guess what? Because we've got 3 squeezes now, if all 3 show up, black dots, red dot, and orange dot, which is the most compressed, guess what? All 3 arrows will also show up. So if it's a black arrow, that means you're getting a buy signal just on that black squeeze, the red arrow, of course, on the normal squeeze, and then the orange arrow on the new super compressed squeeze, right? Which is fantabulous. Okay, so and this is true whether you're using a 5-minute chart or a monthly chart. Here's a monthly chart, okay, on the Qs. Guess what? Big old squeeze, big old squeeze. Look at that move, right? And then this was one that was developing as well. So the other thing to kind of keep in mind too is that these will also show up both ways. So, you know, here's one where, okay, there's a squeeze, boom, we got a sell arrow. This is the weekly chart of the Russell, boom. Here's a squeeze, we got a buy arrow. Now, was this the best signal? No. You know, it wasn't the greatest signal. It kind of went up and then kind of went down. Ultimately, it went up, and that happens. Again, another buy arrow here, explosion. And in this case, nice move to the downside. So the squeeze helps you navigate these big moves like this, okay? Now, here's a 5-minute chart. Same thing. If you like to trade the S&P futures and you're looking at a 5-minute chart, guess what? Oh, squeeze, down arrow, I guess I'll short. Okay, squeeze, down arrow, I guess I'll short. Squeeze, okay, this one, it was a little bit of a pop, not much, but a little bit. You know, you keep your stop in place. Down arrow, squeeze, puke, squeeze, up arrow, buy, wow, rally. Okay, so it just, again, it gives you direction. You don't have to sit there and go, oh my God, what should I do? Just wait for the squeeze in an arrow. That's a signal, right? And then know your risk, take the trade, place your stop, and you don't have to think about it very much, which is fantastic. Okay, so again, it's a new and improved squeeze strategy. So I told Eric I was very happy with this, and then it was a job well done. Though, frankly, I was appalled at my collective lost profits over the years, not having had this for the last 10 years. I will talk more about that in a second, because when I started running back tests on it, I almost puked. So this combination created a great new and updated trading strategy and system that would improve my trading right away. So I went to bed, thought about it, and I had another idea. And Eric's like, dear Lord, now what? So I gave him a call and said, I need one more thing. So a few years ago, Eric created this tool for me called the Early In and Out, and I needed him to adapt this to the Squeeze Pro. All right, so what is this? So the idea with this is twofold. You'll notice these bars here. When there is a squeeze, okay, and notice that these bars change. These bars kind of reflect the color of the momentum. Not exactly, and I'll tell you why, but you can see if this is dark blue, then this is dark blue, right? If this is red, these are red. But when there's a squeeze and you get a green dot, what's that's telling you is that heads up, because sometimes it's like, well, it officially, when I say it fires short, Eric's going to block his number, right? When I say it's going to fire short, or it fired short, what that means is after a series of dots, whether they're black or red or orange, that first green dot, if the histogram is below 0, that's when I say, oh, it's fired, okay? But by the time it fires, a lot of times the trade's already underway. The green dot is a heads up that the squeeze is about to fire, okay? So I love that for getting in early, all right? Oh, look, it's about to fire, before, let's get in early. So that's what I use this for. And, you know, again, a couple of other examples here. Here's the S&P futures on a 78-minute chart, one of my favorite time frames. So we get the squeeze, we get the up arrows, and then it's like, oh, it's about to go. And then boom, okay? Here's the squeeze. Here's some down arrows. You know, what do we do? What do we do? Oh my God, it's about to go. It's about to go. If you're going to get in this, get in now or you're going to miss it. Boom. All right. So that's the idea with that. A couple more examples. Here's McDonald's. You know, again, you know, oh, here's a squeeze, squeeze, squeeze. Boom. Off and running. Squeeze to the downside. Hurry. It's about to fire. You know, don't miss it. Same thing here. It's about to go. You're going to miss it. Boom. So I like that because it kind of gives you a heads up when it's about to go. Now, the other thing with this, you're going to notice that these bars, okay, they're called the early and out bars. So they do two things. First, they do tell you when the squeeze is about to fire, and that's important because if you're wishy-washy or you're hemming and hawing, what that's telling you is that you really need to you know, get your business done or get off the pot because it's about to go. All right, and that's nice because you don't want to. There's nothing worse than, you know, it's like the squeeze is fired off like 5 dots and now you're buying it, right? You got to get in while the getting's good. So what you're going to notice here is that typically in a normal squeeze, what I do is I get in, okay, it's fired long. The typical squeeze lasts about 8 to 10 bars, no matter what time frame you're on, okay? No matter what time frame you're on, it's going to last about 8 to 10 bars. So a weekly chart, that's 8 to 10 weeks. Monthly chart, 8 to 10 months. Hourly chart, 8 to 10 hours. At some point, though, when it loses momentum, generally, to me, the squeeze is over once you lose 2 bars of momentum. Okay? Now, normally what I used to do is I'd get in and then I'd get out. You know, typically I'd scale out, but I'd get out after 2 bars of momentum. So you can see here, I'd get in here and get out here. Well, what I had Eric do is say, well, you told me when the squeeze is about to fire, can you tell me when the bar is about to change momentum? Boom. So here you can see that the candle becomes dark blue, but the momentum is still light blue. What this is telling you is that the momentum is about to change, okay? So now I've been getting out then, and typically I'm getting out much better. So in this case, I'm getting out here instead of here, all right? You can see same thing here. When this bar turns yellow, it's telling you that the momentum's about to shift and this market is going to turn higher. And so I've found that very, very helpful for managing the trade that way as well. Okay, so a couple more examples of that. So again, here's the squeeze. You got the green heads up bar. You're getting short. And again, when this bar turns yellow here, even though the histogram is still red, it's like, look, this is about to turn. You might as well get out now, right? Because if you waited, you're getting out 10 points later, which is $50, which is $500 per contract of the S&Ps. Okay. Same thing here. You get in long, get out here when the bar gives you the early warning, not here when the momentum finally catches up. Okay. So that's the idea. So that was very solid, very helpful. And then the second part that I asked Eric about is I need statistics. I need history. I need to know what the squeeze normally does on this time frame. Give me some data that I can sink my teeth into. All right. And so what was great about this is that now he would sit there and it would just be based on whatever time frame I was looking at. So a daily chart back 20 years. So I can see here that there was 122 squeezes, 71 of them fired long, 51 fired short. The average squeeze length was 6 bars. Okay. But more importantly, the average move was $4.64. So all of a sudden now I knew that if I got a daily squeeze on the spiders, I could expect an average move of $4.64. This means a couple of things. One, if I get my average move, $4.64, I probably want to get out because that's the average move, right? Now, sometimes there's going to be bigger ones, but now I can plan, okay? I can plan for this. I can utilize this in my financial planning. So this was, of course, great. And so I wanted it for each one. I wanted it for each of the squeezes. So all of a sudden it's like, oh my gosh, it's kind of an overload because now I can see this for the black dots. I can see this for the red dots, and I can see this for the orange dots. So I was like, okay, Eric, this is great, but I need to slim this down a little bit. So he did a light version now where I can look at this and just say, great, I can see, the average run for these dots is $4.31. The average for the red dots is $4.41, et cetera, et cetera. So now I know how to plan for the squeezes. So question, does this work for Forex trading? Absolutely, yes. It's very, very powerful with currencies. Absolutely. Okay, so let's look at some more recent trades here. So that's a good example of Google. Again, same thing here. You can see the nice thing, this is why, you saw earlier I was trading a lot of Google and Amazon. Well, it's because the average squeeze in Google is $40 a share on a daily chart. Okay, and the nice thing is you could change this to a 30-minute chart, and then you can see what the average 30-minute squeeze is. Okay, so the NASDAQ on 2-hour chart, the average move for a squeeze on a 2-hour chart is 47 points, okay, for the low setting, 68 points for the mid setting, and 74 points for the high setting. Guess how useful is that? Gosh, every time there's a squeeze on the NASDAQ on a 2-hour chart, that's how many points I could expect to net from that trade. All right, so super, super powerful there. 2-hour chart of the spiders, same thing. So whatever time frame you want to see, all of a sudden you've got an entire system around it that you can look at, you can measure, you can plan for, right? You can really dial in to the probabilities for that. Now, I was talking earlier about Peloton. Okay, so this was the trade that we did earlier this year. Here's a 195-minute chart. We can see the squeeze set up here. We got the buy arrow, okay? And it came back, we added to it. We got the buy arrow. And again, on something like this, because it also had a high short interest, we loaded up on this. And this was one of my better trades of the year. And it turned into a $250,000 trade. All right, because it had all that stuff on there. Now you'll notice here that I lost money on the Qs and I lost money on the spiders. Those were hedges. It's kind of like, okay, this market's getting a little shaky here. I'm going to put on some hedges. They didn't work, but I was able to net $250,000 on Peloton and another $200,000 on Tesla. So these were all, again, just kind of using the same thing, using squeezes on there. So here's the example of a trade in Beyond Meat. Beyond Meat trading sideways, sideways, sideways. We get this big squeeze and boom. This was a fantastic trade, turned into a $160,000 trade as the stock continued to climb up. And so the idea with this stuff is that, again, you don't need to look at thousands of charts, just have a handful of stocks and wait for those setups, okay? So what I found with this is that, it's kind of like, okay, great. What tools of this are easy to use? So for those of you familiar with the small account setup, I love this with the small account setup. Here's the new Squeeze Pro. Here we are at the mean. Here's a buy arrow. Guess what? I'm looking for a 2 to 3 ATR move, right? That's the kind of stuff here that can be very, very helpful. So long story short, I love the new settings. It turns the regular squeeze from a solid indicator into an improved souped up signal and a complete trading system that works on any market, on any time frame. And guess what? You can scan. Now, for those of you that don't know, this is a scan, but we also added kind of a radar screen for Thinkorswim. So the scans, basically you can just sit there and say, okay, great. I want to find the new Squeeze Pro with a stock that's in 10% of new highs. I search in all optionable stocks and I intersect that with weekly options, boom. And then there's my list. So I can narrow down thousands and thousands of stocks with the push of a button. Okay. And again, that shows an example there. You can also do this on different time frames. Okay. This was in that case, that was a weekly chart. Here's a daily chart. Okay. So if you want to look for daily squeezes, if you want to look for 30-minute squeezes, same thing. You can just change the time frame there. All right. Which is nice. So now here's what's nice too. One of the things that I've always liked about TradeStation versus Thinkorswim is the ability to kind of plug things into a radar screen, right? Well, now Eric's built this out where, boom, we can go in, add this to Thinkorswim, and now we can see at a glance which squeezes are setting up. Is there and we call it low, medium, and high, okay? And now you can just, and this will tell you, okay, yeah, this one already fired, or this one's setting up. And so what's fantastic about this is now, again, it saves a lot of time because you can see at a glance which stocks are setting up. In this case, I ran the NASDAQ 100. You could run the S&P 500. You could have your own watch list as well. And again, it just saves a lot of time because what's happening is you've predefined the opportunities that you wish to participate in, right? You've already predefined them. Now you just got to find them. And instead of looking and staring, scanning through thousands of charts, you just push a button. You just push a button, which is nice. And then if you've got a list of stocks that you like, you can see at a glance which ones are setting up, which is really sweet. All right. Okay. So let me show you this real quick. And then we'll also go back and we'll look at that NASDAQ futures trade and see what to do with that. So at the beginning of this, I talked about the Minnesota house story, right? And one of the books I came across was Mark Douglas's book. And one of the things he said is consistent losers, and by loser, don't take it the wrong way, like, oh, you're a loser. What I mean is if you're consistently losing money year after year trading or month after month, consistent money losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose. So the idea is that when you have a strong setup, when you're able to identify a high probability moment in time, which this system does, you eliminate a lot of the noise. You eliminate a lot of the crappy market conditions that a lot of people get suckered into. And if anything, if you can just make a promise to yourself, it's like, gosh, you know what? I am never going to do a trade again unless there's a squeeze and unless we're at the 21 EMA. You're going to miss so many trades, but my God, your results will turn around so much just from the stuff you don't do. And I can't emphasize enough, most traders are actually pretty good, but the reason they're losing money is because they can't control themselves. is because they're doing things on impulse. It's because they have a fear of missing out. And again, the human brain gets tricked. If you wake up and you see space up $3, your brain imagines the amount of money you'd be up had you bought 10 contracts. That releases dopamine in your brain, and then you get tricked into thinking, God, if I buy these contracts, that's going to fulfill that dopamine rush. It's not. You're getting taken advantage of. All right, so if you just can identify these high probability moments in time with a specific system, it will eliminate a lot of that garbage, okay? And this has been my trading journey, is learning how to save yourself from yourself, okay? The markets are designed specifically to manipulate our minds and get us to chase moves when they are about to end and to hold on to losing positions too long. They are designed to do that, okay? They're designed to do that. So the key to combat this is to have a system or strategy with clear entry and exit points that are non-negotiable, okay, and that are not open for interpretation. You know, you're in, you're out. So you'll know when it is safe to get in. You'll know when it is too late to get in, okay? And that's really a key with this, because it identifies, a lot of times somebody will say, oh, what do you think about this trade, John? I was like, man, I wish I was in it, but it's too late for me to participate. And that's some of the most important words you're ever going to be able to tell yourself as a trader, is that it's too late for you to participate, so you don't do anything. Okay? There's always going to be another trade, but if you chase stuff, if you get in too late, God, that's such a bad habit. Such a bad habit. And again, it just comes back to having a system and following it. Now, big trades once in a while are nice. A couple years ago, I was in the trading room. I did a $1 million day trade. And, you know, don't get me wrong, it's fun when it happens. And look at this. This happened on Tesla when it was $160. That's crazy. But really what we're all after, including myself, is consistency. You know, would you rather wait all year and you finally make $1 million, or, you know, one time, or are you able to crank out, you know, a nice consistent income month after month? So what I like to do is I like to kind of keep things simple enough that I can manage my trades from my phone. Again, I like looking at the markets, but I don't want to be glued to my computer all day. I want to be able to see what's going on. I can take a look on my phone. I can make adjustments if necessary, but it's not a high stress endeavor, okay? So overall, I found this to be amazing in terms of getting more high probability at bats in the market. I always like to test this stuff out before I start using it, all right? And although I'm still on the lookout for home runs, and we've had a couple of home runs this year already, I'm also on the hunt for consistent base hits, all right? And we're going to come back and add some more to that NASDAQ as well. So when I talk about lost profits, take a look at this. This is brutal. So here's the cues 10 years back. All right, so mid is the normal squeeze, which I've always used, okay? 63 squeezes over 10 years on the daily chart with an average move of $3.49 or $3,490 per 10 option contracts. And again, that's approximate, you know, with deltas and all that kind of stuff. On the new setting, there were 94 squeezes over 10 years on the daily chart, okay, of moves slightly higher, $3.79. So that's $3,790 per 10 contracts. That's 31 additional squeezes I could have caught, or $117,000 in lost profits, simply because I did not have that signal. What gets worse is Amazon is one of my favorite stocks to trade, okay? On the normal setting, there were 66 squeezes over 10 years. Average per 10 contracts, $52,000 on a move of 72 bucks, delta 70 options. With the new setting, there was 108 squeezes with an average move of $76. So about the same, $76 versus $75, give or take. But there were 108 instances of this versus only 66. That's 42 additional squeezes I could have caught, or $2.2 million in lost trading profits, just trading 10 contracts at a time. All right, that's how powerful the signal is. And it makes me sick to think about that, but I'm glad to have it now. So if you've liked all this stuff, and again, some of you have seen the Squeeze Pro, awesome, you already have it. If you don't have it, I'll just kind of lay it out and show you how you can get it, how you can learn about it. Or if you just want to do some live trading with me and you've already got it, we will lay all this out here. So I'm going to do a deeper dive into all of this on Saturday, March 7th. I haven't done a class for a while. This is not a new tool for those of you that already have it. For those of you that have not heard about it, I want to get it in your hands so you can actually start utilizing it as well. You've seen how powerful it is. As a bonus, these tools are included in various levels of the class, okay? So what this is, and the link for this is simplertrading.com/new. There's a basic class, which is $697. There's a pro version, which includes some live trading, which is $997. And then there's the elite version. Okay, so what's the difference here? If you're looking at this going like, that was cool, I would like to learn how to do that, then this is kind of a no-brainer. I mean, I think this is something where you can make it up on 1 or 2 trades, but you'll get access to the strategy class where I teach you how to use this in depth. You'll get a copy of the Squeeze Pro indicator. You'll get the buy and sell arrows, and that was, if you recall, that was kind of the arrows that showed up or down. Oh, and we need to look at the NASDAQ, by the way. That 15-minute squeeze is about to fire off. If you're newer to options, it will include an Options 101 course to get you up to speed on how to trade options. And as a bonus, that watch list is essentially the radar screen for TOS. I will give you a copy of that populated with the stocks that I like to look at, okay? And of course, you'll get a copy of my Thinkorswim scans. So for $697, you basically get set up with an entire system that you can use. Now, the pro version includes all of that, plus you get that early in and out indicator. That's the bars that say, get in. And then you get 2 live trading days. And then the elite version also includes those statistics, like there was 76 instances at $3.49, because I know some people get really hardcore into the statistics and some don't. So for you hardcore guys, that's the stats tool. And an additional 2 days of live trading, so for 4 days total. Okay. Now, from here, well, hold on. Let's now, before we get too excited about this, we'll come back and I want to look at this NASDAQ trade as well. So I'm happy to stick around and answer questions, but let's go through a couple of things here real quick. Now, if you've already got the Squeeze Pro and you're like, okay, that's great, John, but I'd like to do the live trading with you, because during the live trading classes, we actually typically make a lot of money. Again, not guaranteed, but since we're all kind of focused on the same things, we kind of, can impact the markets that way. There is a way to participate in that. We'll give you some information on that. But if you're looking at this, one good news too is that if you don't want to pay for it up front, you don't have to. You can use PayPal credit. Okay, so when you go to your method of payment, choose PayPal, do PayPal credit, and it's basically 0 down, nothing owed for the first 6 months. After that, it's an interest rate. You can make payments. So that's pretty cool. That's a cool way to do it. The basic package, again, is $697. Now, I want to show you something real quick. While we've been doing this, okay? While we've been doing this, we were talking about this NASDAQ squeeze. I did a 2-contract trade. And on that 2-contract trade, I'm up $700. So guess what? That cover, now it's $710. But that covers the price, 2 contracts and a 15-minute squeeze, that covers the price of the Saturday class. So again, I just want to kind of give you an idea of just kind of how fast this stuff can work. So it's pretty powerful like that. So I'm going to go ahead and let's see if I can just flip this out here. And it hasn't fired yet, so I guess I might as well hold on to it. But does that make sense? Like, so this isn't like it's 2 contracts. It's not like you have to do, and most of the time I'm using equity options anyway. It's not like, oh my gosh, we got to do all the stuff. It's just that you don't have to trade a lot to be able to generate the income to pay for this is, I guess, my point. And what I look at here is what I'm doing this stuff too, is that during the live trading class, I like to, my goal with it is an informal goal, is that you guys are able to make enough money during the class to pay for it. Now, I can't guarantee that because I don't know your discipline levels. I don't know how much size you're going to do and stuff like that. But that's my goal with it. And, it typically pans out like that. So the pro package, again, recall that it, the live trading dates are going to be spread out. You got March 10th and March 11th, and then there'll be some 2 weeks after that as well. And then the pro package also includes that early in and out tool, which is kind of cool. The elite package also includes the stats if you're into that, plus an additional 2 live trading days. Now, one question we get is, will the indicators work on my platform? It's easiest on Thinkorswim. I understand that a lot of people will have Fidelity and Schwab and stuff like that. That's totally fine. One thing we found is that what you can do is you can open an account with Thinkorswim. Just go to simplertrading.com/toss if you would like preferential rates. And there's no cost. You don't have to pay for data. You do not have to pay for anything. You just got to put in like $100, which is not a fee. It's just, you're just transferring money over there. And then you can use their charts and then still execute wherever you want. And so we have found that a lot of people will do that. And all right, so that's that. So the other thing is, a couple people I know have asked too. It's like, okay, awesome, I already got all this stuff. I would love to just do the live trading with you. And the live trading we do, I mean, again, it's fun. We have a lot of fun during the live trading. So if you would like to do just the live trading, well, I don't want to confuse it just yet, but I'll show you a link for that shortly. Any questions on this? I know I've been talking. It's like 8:22. We're probably all tired and ready to go to bed. What questions do you guys have? Do you have to pay for the platforms? Okay, so the good news is Thinkorswim is 1,000% free. So with Thinkorswim, there's zero cost, which is great. So they don't charge you for quotes. They don't charge you for installs. It's free. So that part's really fantastic. Will there be other dates available for the live trading dates? Let me write those down for you. Or does anybody have the live trading dates? There will not be, but the good news is they're recorded. And so what I found is people can actually, if for some reason you can't, oh, by the way, so you have these days and these days, so 4 total. If you can't be there live, we're going to set you up with text alerts and push notifications. So, if you got to be at work that day or you're traveling, if I do a trade, I will send it out to you. And then when I get out of it, I will let you know that as well. Okay, so that's a very powerful part of this as well. You don't have to be glued to the screen during the hours if you can't for some reason. How best to avoid some of the false signals. So we're going to do a deep dive in that on Saturday, because a big part of doing this is knowing what not to do. Oh yeah, how does it work with short interest? It works great with high short interest. Yeah, we'll do some scans specifically for short interest as well. Okay, so let's see here. Dun, dun, dun. Okay, so and by the way, I am going to flip out those NASDAQ futures here. So that was good for 2 contracts, $710. So we're out of that. It may keep going overnight, but I want to sleep tonight. Oh, thanks, Shep. Yeah, I mean, I do get excited about this stuff. I mean, I know kind of the stuff's pretty powerful. I mean, this is the account I trade during the live event. So it's already up over 100% this year. It's one $1.1 million in trading profits. I don't make money every day, but over time it goes up. And then I also trade a smaller account as well. And you can see again, it's the up about 27, 30%. But I give signals on both so you guys can see. And right now I like Zoom. That's going to be an interesting one. We'll see how that goes. Today was kind of a sloppy day. Made a ton of money last week and decent day yesterday as well. And so in terms of the class times, March 7th. So Saturday, March 7th. This is going to be Saturday, March 7th. I always like to do this when the markets are closed. I believe at 10 a.m. and all times are central. We're going to do like an indicator install, and then at 12 noon, I'll start the strategy class. And then for the live trading, we've got March. Let me double check. If somebody has the dates for the live trading, they're probably on the link. They're probably on the page there. But I believe we've got 2 days of live trading, and then a week off in between, and then 2 days of live trading. But it'll be on there. Oh, yes, thank you. So 310 and 311. So 310 and 311. And then we'll come back again on 324 and 325. So the reason I do, or 325. So the reason I do this is that you have 2 days with me. Then you've got a week on your own. So you can try it out, see how you do, and then come back again. So and why the live trading? Well, when I was trading, it always annoyed me that the instructors would teach everything by PowerPoint. Like it was all perfect. But then when you got into the real world, and the shit hit the fan, like what do you do? And so it's kind of like golf. If you have to go play golf with your boss on Monday and you've never played before, and you spend the weekend reading books on golf, you're going to show up on Monday with a lot of book knowledge, but zero practical experience. How do you think that first drive off the tee is going to go? It's going to be a disaster because you have not had any practical experience swinging the club. What you got to be able to do is swing the club with a pro watching you. And then they can tell you, you need to drive that left shoulder back. You need to loosen your grip a little bit. And it's the same thing with the live trading. You need to be able to do trades with a coach. Like I would be your coach. So you can ask me like, okay, first of all, you're going to be able to watch me trade and you can mimic what I'm doing. But then it's like, okay, well, what about this? What do you think about this? Should I get in here? And I can look at it and say, well, you need to loosen your grip on the club there, buddy, because you're going to choke it to death. It's kind of the same thing. And so the idea is to give you confidence that you can do this on your own. Now, if you do have this stuff, okay, if you already have this stuff and you're interested in just doing the live trading, there is a way to do that as well. Just send us, I think Caleb's in the room and a couple of other guys are in there, and guys and gals. You can send an email. They'll hook you up. So that way, if you just want to do the live trading, you can, I think you can pick either of the days. You can do there's a, so you don't, if you're not going to, you already have got the tools, you don't need them, then it's a different structure for that. Okay. So that's that one. And then let me see, I'll show you some that are setting up right now that are kind of cool. One thing I wanted to show you guys is that if you look at the spiders, or the S&Ps, let's see here, NASDAQ. So on a monthly chart, you can see here we've fired long. Okay. So the old squeeze here has been 1, 2, 3, 4 dots in. So believe it or not, I don't think that this up move is over, but we do need to come back a little bit. So you got to keep in mind, we do have a big monthly squeeze there. And then keep in mind too, the squeeze we just took in the NASDAQ futures, look at this. I mean, it's perfect. And it's not, it's, here's the squeeze, here's the buy arrows on 2 contracts. We made $700 in 45 minutes, which was enough to pay for the strategy class. Okay. And this has got more potential upside here. But what I'm telling you is that Instead of dicking around, trying to catch a move here and there, just wait for everything to come together, then take a trade. All right. 2 contracts, $700 done while we were doing this. And so does that make sense? Then that's the part that gets me excited, is because you don't need to force a trade. Just define the setup, wait for the setup. And a large part of this is just learning to have the discipline of what not to do. A huge part of trading is learning what not to do. And we will definitely be covering that on Saturday, March 7th. Am I a Libra? No, I'm a Taurus. I don't know what a Libra does. I don't even know what a Taurus does, but yeah, so good stuff there. Yeah, this is a great setup right here. So if you guys are trading futures, and then you just stay in it, like right here, here's a short, right? Stay in it until it switches momentum there. So that's that. Let me see if there's anything else here. Well, anyway, so on Saturday, on March 7th, and again, it's not this Saturday, but next Saturday, we're going to find setups. We'll be doing a lot of stuff. Now, that was a 15-minute chart. It's a beautiful setup, though. It's just exactly what we talked about. We actually got out of it early, simply for the sake of, I wanted to make sure that if you guys were following it, on a 2-lot, you booked enough gains to buy the class, and if you want to hold on to it, that's fine too. All right, guys. Well, what I'm going to do is, it is 8:30. We've been together for 90 minutes, and I'm sure everybody was ready to go home. I'm just going to leave this up here. I'm going to write the dates down for the class. We'll hang around here and type any questions you have. But otherwise, again, thank you for joining us. Definitely looking forward to working with you guys. For those of you that this is a new concept, I'm excited because it's going to change your trading life. And for those of you that are, you either got this or you've done this and you're like, you want to do the live trading, it's always, always good for honing your skills. I think I've got these dates right. And then keep in mind, the basic comes with all of this. With the pro, you're going to get that plus this. And then with elite, you're going to get all of that plus this. So if you're looking at this going like, oh my God, this looks amazing. The elites, you're going to, I always think of this stuff in terms of ROI. What is going to be my return on investment over my life? You just saw what happened on a 2-lot trade in 30 minutes, right? Does every trade work? No. Do a lot of them work? Yes. When they don't work, is it a manageable loss? Yes. Is it something that can generate consistent income and reduce a lot of frustration in trading? Yes. Whew. All right. So that's that. This is the link. All you got to do is type this in, simplertrading.com/new. That'll take you to the page. And then, of course, if you do have questions, we do have a great team here online with you guys that can answer questions. I'll hang out here for a little bit, but ultimately, I know we all want to get back to eating dinner and watching the NASDAQ futures move higher. All right. Excellent. If you take the pro, for how long do you offer to text trades to subscribers? Okay, so Dan, the texting the trades is just for the class. So I'll text all entries and all exits for the class. And then from there, during the class, I'll tell you about my small lot mastery, the options gold room, if there's additional things you'd like to consider. Yeah, so it's for the length of the class. Awesome, Alan, thank you. Yeah, Meng, so we do have this for TradeStation as well. Oh, yeah. For some of you guys, we're doing a live event in Austin. I think the 3rd week in Austin, too. So for those of you that are coming to that, if you're interested in that, we do one live event every year. We keep it pretty small, like 70 people. I don't like doing big events, so we just keep it pretty small. First come, first served. It's pretty fun, but you can ask them about that as well. All right. Do we have to renew the Squeeze Pro yearly? Great question. The answer is no. When you get it, it's yours. Who do I email about doing the live trades and getting the stats? You've got the other ones. Yeah, so just you can do I think Caleb and Robert are in here. You can just do, support at simplertrading.com and you will definitely get back to you. The elite live trading days are going to be the 24th and 25th, and then the pro version is the 11th and 12th. I apologize if that doesn't answer your question. That's how I'm reading it. Yeah, so the elite includes this and this, so 4 trading days. Oh, nice, Alaska. No, that's great. You learned how not to be greedy. I bought 10, 11 calls, but they shot up over 3K. Oh, that's awesome. No, I love it. No, it's great. And I think, we were talking about this earlier. Just be sure that when you do make a good trade like that, and part of what we'll talk about on that Saturday class is just learning how to keep it, because I can't tell you, I see a lot of people that are like, make a bunch of money and then they just piss it all away. Simply just and not their fault. It's just they don't know that how the market manipulates them. Right. And that sucks. So it's just kind of showing you some tricks that I've learned over the years for that. Nice. You just made 9 3/4 points in the NASDAQ. Yeah, John, if you guys, so the idea with this is that if you are interested in doing this, you certainly want to lock in your spot. You can look over the next, certainly you can call tomorrow, take a look. And then, but yeah, this will be a fun class. And my goal with this on the Saturday class is that if you've never done a class with me before, I promise you're going to come out of that with a whole new view of trading. I've done a lot of classes. I go through the feedback. I've honed this down pretty good. And at the end of it, you're just having the kind of the tools and the confidence to be able to do this. And that's my goal with this. If you have done classes with me before, what I've found is that people enjoy the refreshers. They always get something new out of it. And of course, I'm always updating it to reflect the current market conditions. I did a class, last class about this was in July. The markets were very, very different then than they are now. So how do you account for a market that's all of a sudden puking? Well, don't be scared about it, but you don't want it to ruin your day either. All markets are trading opportunities. All markets are income opportunities, no matter what they're doing. You just got to know how to, what's important to follow. Excellent. Yeah, no, David, and I've blown up 3 accounts when I started, and I know the pain of that, and it sucks. And so the goal with this is that you get into a rhythm so that doesn't happen anymore. Like I've found all the ways to blow up accounts, and so the question is, will this work with a smaller account like 5 to 10K? And the answer is absolutely yes. Let's see. Yeah, and we'll definitely talk about short interest for sure. B, you're in the pro class. Yeah, so just anything like that, just if you just email support at simplertrading.com, you know, anything you want to move or do something like that, they can certainly help you out. Greg, I'm fairly new to options trading, and I'm concerned that I won't understand what or how to execute the trades. Okay, Greg, so what I would recommend, first of all, I wouldn't be intimidated by it, but I get you. The nice thing about the basic class is that it includes an Options 101 course. You'll get that delivered to you first, okay? And I would definitely review that before the class. Now, there's a bunch of big, thick books out there that you can read that honestly are just confusing. So this Options 101 class is designed to get you up to speed. And then when I am doing the trading, and especially the live trading, I really go through step by step. And just so you guys know, this isn't a class where I'm planning to do like a lot of what I would simply call complicated strategies. My first choice is always going to be to buy a call or to buy a put. Maybe we'll do a spread, okay? But the goal of the class is directional, simple trades. You know, we're not going to be doing broken wing butterflies. Nothing against them. Those are great. But the goal of the class is to understand how the setup impacts the underlying stock, okay? And the best way to do that is that, oh, here's a signal, let's buy calls. Here's a signal to the downside, let's buy puts. So I deliberately make this class simple to follow. If you're a more advanced options trader, of course, the nice thing is if you see me buying a call, you can go like, oh, can I do a call debit spread? Or could I sell a put credit spread? Of course. But I do deliberately do these in a way that's where it's meant to be understandable if you're a little newer to the process. Excellent. All right, guys. All right, I'm going to shut off the mic. I will leave this page up. Like I said, this will be, this is the kind of class, if this is new for you, this is the kind of thing that can kind of make or break you as a trader. I take this very, very seriously because I know the impact that it can have. You guys have a great night. For those of you that will be joining me on Saturday the 7th, I look forward to working with you. And then otherwise, we will see you, either see you in the room, see you at the class. You guys have a great night, and see you on the other side.